Hey everyone, Anthony here. This is the Metals and Momentum podcast, and in this episode, I'm going to talk about ways I invest like a Viking. There are specific asset classes and some investor psychology that worked for the Vikings and can work for us today. I actually traveled to Iceland back in 2023, and I spent a lot of time researching Vikings. It was such a wild trip, and just the whole Viking thing is just a wild group of people, and it was amazing to see the land that they actually stepped foot on. And I was wondering, what can we learn from Vikings in order to make money through investing? That's what this episode is all about. If you haven't joined my email list, I post these articles for Substack subscribers. There's a free tier and the paid tier where you can see stocks, what stocks that I'm actually looking at, and get trade notifications from me. Links down below. That's Metals and Momentum on Substack. So now let's get into the investment thought of the week. Why you should invest like a Viking. When you hear the word Viking, you probably picture fierce warriors, longships cutting through icy waters, and raids on distant shores. But beneath the rugged exterior, Vikings were also strategic planners, savvy traders, and masters of building wealth through tangible, lasting assets. Their success wasn't just luck. It was rooted in how they valued resources, territory, and community. Modern investors can learn a lot from their mindset. Having European roots myself, reading about Vikings for some time, and traveling to Iceland to see the areas where they were known to explore, all this makes me think about how I can implement old ways of making wealth. Tried and true methods from thousands of years ago, and it worked for the Romans, it worked for the samurais, and very much for the Vikings as well. So how did they do this? Number one, they owned tangible assets. Vikings measured wealth not just in coins, but in silver, gold, and in land, things that retain their value through storms, wars, and generations. In today's volatile markets, hard assets like precious metal and real estate and commodities, these provide similar stability. But of course, timing is everything. Amazon was a great investment, but if you bought it back in 1999, it took you until 2007 just to break even on that investment. That is terrible money management. Timing and valuation definitely matters. I certainly wouldn't pick right now as the time to go all in and create like a real estate portfolio in Canada or the US. Here's a crazy story. A family member of mine bought a house in 2016, and I told them they should consider selling that house in 2018 and using that money to buy into the most traditional Viking asset, that is gold. What's crazy is in 2019, they did exactly that. They put $100,000 of gold in a vault, and then the pandemic hit. And for a few seconds, they were thinking like, holy crap, I can't believe this. Timing definitely matters. Their plan wasn't to make money that year or the next, but they waited, and then the lockdown happened, and I myself joined them, but with leverage. I put every penny I had into gold mining stocks, and I just waited. The Canadian government created and spent $644.2 billion from 2020 until the end of 2021. That is a massive jump upward from 73% that's a jump upward of 73% from the prior year of spending. This is all reflecting, of course, the massive COVID programs that we rolled out in 2020. All of that money got sent to the peasants and even some of the kings. So what happened to gold? So if you go to the newsletter on this week, the newsletter is going to be posted on August 2nd. You can see a chart that I've posted in the newsletter there. And this is gold measured in Canadian dollars. I monitor it mostly in US dollars, but I posted it in Canadian because the person that I'm talking about here is Canadian. So it says in the newsletter here, taking a look at the chart on this section of the page here, you can see that by the end of 2019, gold was at $1,971 per ounce, and today we're sitting at about $4,500 per ounce. Gold and silver doesn't crumble. In fact, in an average house fire, it doesn't even actually burn hot enough to melt it. That's just one of the reasons why a Viking's arm ring never lost its wealth. And when archaeologists uncovered it thousands of years later, it still held up. Number 2, diversify like a raider. Vikings never relied on a single source of wealth. They farmed, they fished, they traded, and they raided. All of these are forms of diversification and things that they knew best. The tangible assets they traded were farmed, and because they were skilled laborers, creating a number of unique things people needed, this gave Vikings pricing power. And having pricing power over the goods that we sell is incredibly key. And if you didn't like the price, remember these men and women were wielding incredibly sharp axes, strong enough to slice the head off of a Saxon, even when wearing a full suit of armor. When I look into the long-term holds that I'm considering, if this business has the ability to raise prices or chop your head off if you don't own that product, then this is something that I'm really interested in. Think about like hydro or like potash companies. Sure, they may leave you with your head intact these days, but if you starve or freeze, then I personally would probably rather the quick axe to the neck than die of the other routes we just mentioned. I would still find a way to pay my heating bill if I lost my job in the middle of the freezing cold winter. No matter the price, no potash, no good soil, no good soil, well, then we starve and we starve to death. And again, you would probably rather the axe. Vikings would be on the hunt for multiple streams of income, as am I. Number 3, invest in power and mobility. Vikings' longships were revolutionary, highly mobile, durable, and adaptable. They invested heavily in the tools that gave them the edge. Today, that could mean investing in technology, energy, or infrastructure that powers future growth. There's a Viking song that goes, "My mother told me someday I would buy galley with good oars and sail to distant shores." Well, we no longer ride horses and sail longships, but horsepower via a V6 is not only fun, it also allows you to expand the area that you can travel to and the land in which you can make money in. Worst case scenario, if your village gets raided and you're losing good men left and right, then a V6 will take you out of harm's way. And when in danger, there are goods that you need to get out of Dodge. And what are those goods? Who makes them? Who are the kings? And who are the peasants? That's what I want to know when picking a long-term investment. Number 4, think generationally. Vikings didn't just fight for today, they sought land and resources to secure for their family's future. A Viking-style portfolio isn't about chasing short-term hype, but the world is uncertain, so being nimble is essential now in 2025. We've had 30 years of upward and to the right movement in broad basket ETFs like, for example, the S&P 500. I'm not willing to bet that the good times will just last forever. Good times don't last forever. The Vikings can attest. But when choosing a shorter term play, I'm always thinking about what's the downside, not about how much money I'm going to make off of this trade all the time. It's about building long-term wealth through assets that stand the test of time, but let the fools gamble. And I would want to make more calculated moves, not risking my entire fortune, leaving that to my family as well. So hopefully that they might get a chance to enjoy some of that wealth as well. Number 5, seeking opportunities in unknown waters. Vikings explored uncharted lands, finding value where others saw danger. Likewise, successful investors look around for undervalued sectors or emerging trends like uranium or niche commodities like silver, where the crowd hasn't yet gathered. There was nobody on Iceland when the Vikings first settled there. Now in Iceland, it's full of great people and tourists attempting to take a selfie near a cliff's edge. There are more than a handful of tourists that are lost to a strong breeze every once in a while here out in Iceland, just like the investors who purchased GameStop back in 2020. I bet the ghost of those tourists and the GameStop gamblers are thinking the same thing. Well, that was pretty stupid. There are waves in the market, and sometimes it's best to just step aside and let them pass, or jump on it and ride it, knowing that not all things last forever. Conclusion: be fierce but calculated. Investing like a Viking doesn't mean being reckless. It means being bold but strategic, valuing what actually lasts, and forging wealth that can weather any storm. Just as Vikings' treasure chests held silver, land, deeds, and rare goods, your portfolio should be filled with hard assets, strategic positions, and the courage to jump on calculated opportunities. I refuse to be afraid. I refuse to fall back when the enemy is much stronger than I expected, but I never assume my enemy to be weak either. There's always a risk, and if I'm wrong, I hope to find out quickly before losing too many men.